Welcome back to the table for the Friday, January 3, 2025 installment of Market Plus. Kristi Van Ahn-Kjeseth is with us. I can't even, they want me to say some words today and I can't even get through your name. That is how this plus is going to go.
My last name is a very easy last name. I can't believe you can't say that.
I remember the first time we had a conversation, I said, okay, tell it to me seriously. How am I to say it? And anytime I say it, people around me will go, how do you say your name? I said, Van Ahn-Kjeseth.
It's a lot.
I got it. All right, but I want to talk about words first. You said two things during the program that I just didn't get a follow-up on that I just want to explain because is a difference. You mentioned managed money. We hear about it in the grains, but you were mentioning it in the livestock. What does it mean in livestock, and is it different than what it means when we talk about commodities?
No, it's the same. When you talk about fund movement as far as those investment funds coming in and being buyers or sellers. So managed money can be both long or short commodities.
So that means... Define that one too for me.
Yeah, so they can either be net holding long positions or buyers of a commodity or net holding short positions. So for example, they were record short holding not that long ago and then have bought almost 500,000 contracts of corn over the last 6-7 months. And when you see those large swings one way or another, they can really affect the market. And I was talking about managed money being long cattle. Now that's live cattle, right? They do, I think, track feeders to a degree, but when you're talking cattle, you're really talking live cattle. When you're talking wheat, for the most part, you're talking Chicago wheat. But that is what kind of the general consensus around the market. So if they're holding long positions, they're friendly, they're bullish the market. And so the fear is that they have all these long contracts, and if they get to a point where they feel like cattle have ran their course, they have a lot of room to sell cattle, and that could suppress prices, especially in thinner markets. So that's where it becomes concerning, where commodity index traders can only be long, but how long they want to be can affect the market. But for the most markets, managed money is that focus, and you get that every Friday. And the CFTC comes out with that every Friday to tell you what happened last Tuesday to Tuesday. And sometimes it's just the general trends you want to be watching. Are they starting to kind of flip? Are you starting to see them short it or buy it? And that can give you that confidence behind a market for a certain movement.
Going from one end of the boat to the other.
Yes.
And you don't want to be surprised. You really have to pay attention because a gradual movement, you could get caught on the wrong side of that trend.
Yeah, and exactly like when they were as short as they were for corn market. That was the one silver lining, that everyone was so bearish corn at that point. And you're saying, well, managed money is now record short. So how long do they really want to hang out here? And typically on those big peaks, they don't hang out for a long time. And that was that first kind of spark. Remember when I talk about saying, I really want to see a spark into the wheat market? That's an example of what you could see for a spark of saying, hey, we needed that. We needed that to change the trend.
Well, what we need is some bullish news on ethanol. Let's start with Chet in South Dakota for this question. With the carbon pipeline looking doubtful, SAF production will likely go to Brazil. E15 got pulled from the continuing resolution. It doesn't look like it will go mandatory. Infrastructure is not there for voluntary E15. Ethanol demand looks bearish. Is there a good reason to be bullish ethanol right now?
I don't know if you really want to be bullish ethanol right now. I don't think there's a reason to be bearish either. I think ethanol's kind of found its niche and it's finding its support. I don't think corn can survive, obviously, without it. But for some reason, we see that grind still happening, even though ethanol profitability is not there right now. They are still grinding. You're still seeing those productions higher than a year ago. And so I think that's supportive of the market. But in general, if you were looking at the corn S&D and saying, hey, where could we see the surprise cut in carryout levels? Where's that increase in demand come from? I would say you might be seeing it in exports before you would see an increase in ethanol, just because of the way everything's going. We're running ahead of pace for exports, though the U.S. dollar does concern me that we could make that more, tail it back to where it's average. But I would say if you had to pick between them, exports are friendlier right now than ethanol is.
Let's talk real and Brazil and the dollar. I didn't get a chance to do that during the program, but Gary in Wisconsin wanted to know the Brazilian real is lowest ever versus the dollar. China economy still struggling with no 45Z tax regulations in sight. What is keeping bean prices from plummeting?
That's a really good question. I'm not sure. So if I'm going to be honest, I think that, well, we obviously moved on marketing for soybeans.
Yeah.
So that says enough right there. $10 has been tricky. I just don't know what's going to keep beans realistically supported. The world carryouts are so horrendous right now. I think maybe you got that little bit of news that it was going to be dry and hot in Argentina, and it was meal driven, like you had said earlier, that buying came into meal and kind of spilled over to the rest of the complex. So I think you saw that situation as well. And I think you went through $10 with a little bit of force. So you brought in some buyers saying, hey, we got through that. Let's be buyers and then risk it back, to say, can we sustain above that? But in general, I am nervous soybeans. We have this crop report, obviously 1 week from today, but then, 17 days from now, we also have a new president, and a new president that has been in this seat before and doesn't need to get reelected. And so I think a lot of people have these thoughts of how this next 4 years will go, and I'm not so sure that's how they're going to go. He doesn't have to please anyone. He doesn't have to get reelected. And so I think there'll be some surprises along the way with President Trump, and I don't think they're all going to be bad by any means. But if I would say that one market has a lot of volatility ahead of it, I am worried about soybeans.
Just one?
Yeah.
One volatile market? I mean, that's the thing that I remember from the first 4 years is
Right.
the volatility. That was also a combination of just the general factors of the world. We were dealing with a lot of different things at that time too. That's it. Just the two coupled together for very volatile times.
And you actually have that right now. I just feel like we've become desensitized to it. Russia and Ukraine is still a very big issue, and I feel like none of that premium is built into that market right now.
Well, look at the story that Dave did about the look back at Jimmy Carter. 10 years Russia and Afghanistan that Russia was in Afghanistan. We're in year, 4? How many it's going to be this year, I think, in Ukraine. So, yes, things can go long and have an impact. All right, let's get to 25 now with Trent in Iowa. For old crop soybean cash marketers, is there a downside trigger number to be watching to give up and just throw in the towel? Should we be using the same thinking on the 25 crop? So I guess if you have anything left on 24 to say it. But otherwise, let's focus on 25.
Yeah, I would treat $10. If we can stay above $10 for soybeans, we had such a brutal day today, so you're not looking very pretty, and I'm giving you a very tight window. But I would say that if beans break $10 futures, cut the losses, and you can always defend it if it looks like it's going to come back through. Given
what you said about beans and the downside, I think you also make it sound like there's a small window to start doing some stuff on beans in 25.
Yeah, so I think, you have a short window here, and then I think you need to really be looking at the bigger picture. And so my hope for 25 would be 460 to 470 on December corn is my hope that we can get there. And I would say I'm very nervous about corn's acre number. So we have USDA outlook for them in February. That's your first hint. It is not an official number. That's their kind of hint at what we could see. And then March 31st is your planting number. And I'm just so worried you're going to see a very, very large corn number out of that, which would be friendly beans and give an opportunity, right? I'm hoping we can get to 460 to 470 D's 25 corn before March 31st to be able to do marketing. Otherwise, as far as like a downside price count where you would say, hey, let's throw in the towel. I don't have those for 25 because it's so early in the season. We had an opportunity a long time ago to do some marketing. I hate when you have people that come and toot horns, so please don't think that I'm doing that by any means. It's a small fraction that we were able to, but it's enough of a fraction that gives us confidence to just be patient and wait for that before we really do anything major. So I would say there's not really a line in the sand for 25. And shortly in February, we start to generate those insurance prices, and that makes things a little bit easier that you can kind of say there's a floor on a small percentage of your crop.
But the acreage fight, we're really good at growing corn in the United States. The beans have Brazil has become in and really taken a lot of this business. Corn's their second crop. We love to plant corn. It's the easiest thing. Mark Gold just told me a couple weeks ago, we're really good at planting corn and doing corn. Is that what the default will be, is planting corn in 25?
Yeah, I think so, without a doubt, because Honestly, I think you're looking at a situation right now for a producer that looks at the corn price and says, well, I'm not happy with it, but on a decent yield, I can make money. And then I think they're looking at soybeans and being like, I can't make money. And so I think that alone is going to push the acres. And then you put on the fact that I think producers are natural gamblers. I mean, that's so much of their story that I think you see a producer saying, I'm going to bet on the chance of getting a good corn yield. And I had a conversation the other week with a producer that I thought was so well spoken when it came to it. And he goes, I don't mind paying more for my seed costs. Like, I don't want to pay, but I don't mind paying more when I see the returns I'm seeing in my corn yield. But when it comes to beans, I'm consistently paying more and I'm just not seeing those returns there. And I think it's that frustration factor. And I would be frustrated as well of seeing that happen.
You said optimist, I think, as a gambler,
Yes.
optimist. Farmers have always been that way.
Put it that way.
All right, Kristi, good to see you.
Good to see you too.
Thank you so much.
Yes.
Kristi Van Ahn-Kjeseth starts our 2025 year here on Market Plus. And I do have a reminder to get signed up for the Market to Market Insider newsletter. It is free. Sign up at markettomarket.org. We send it out to you each and every Monday. Many of you have found that secret. Now join us. Next week, we are going to look at a pair of government reports with two of our market analysts. We'll have Matt Bennett and Ted Seifert with us. Thanks for joining us and have a great week.